Free TV, in association with GetOutOfDebtFree.org.
You must have had these before.
Well, by law, we do, of course we do. But we
A few people around the table is that is referring to a corporate fiction and not the blood living being.
You are a
corporate
entity,
Yeah. So you accept that. Thank you.
You know about it.
whether that's
quick question.
When I sign my credit card agreement,
yes,
does the bank sign it?
credit card agreement.
Yes.
There's no signature.
So would you say that it then is a unilateral contract?
It's got a job. I'm a retail banker. Okay, I'm not a city banker.
So can you tell me the process by which it passes to a debt collector? Because suddenly these debt collectors haven't, but we know that they purchase them because their association is called the Credit Services Association, which buys and sells debt effectively. So what's your sort of understanding of
Yeah. So at branch level, we don't get involved in any of that. No. However, you're right. The debt is effectively sold. So bank will take a stance. How much time, energy do we invest in trying to reclaim this debt? When it gets to a point, a centralised team will make a decision. There are a certain set of rules to which they work. I don't know what they are. I don't know what the rules of engagement are, but they will say, okay, this is now the cost benefit. It's costing us too much to collect this debt. We will sell it we'll take a loss. We'll sell it to an external collection firm specialising in collecting debt.
Like
That's
a viability
effectively,
study.
yes. It's a simple cost benefit. A decade ago, the way that it was structured was that the teams could kind of change depending on liabilities, depending on how the business is running. You could change. You cost benefit. You could be softer one month, harder another month. You're no longer allowed to do that. Everything has to. It's all about treating customers fairly in this. To do that, you have to be consistent. You can't, from one month to another month, decide that the rules have changed in terms of passing that debt on. So it's tighter a lot tighter than it used to be. I don't know what those rules of engagement are.
Do you know the current market rate per, how many pence in the pound?
No, you don't know. I honestly don't know. Sorry.
What happens to the customers sort of standing with, do you then contact the credit agencies or to black mark their accounts, or what happens?
Okay, so
Are they able to bank with you again, or how's that?
Okay, so in terms of if they have bad debt with bank, okay, and that's who I work for, you won't be able to come back to us as a customer because you've defaulted with us effectively. If you did have the same scenario with another bank on the high street, then you would be able to come to us. That's not a problem. It is if the debt was bad with us, you wouldn't be able to come back. If, say, you're a HSBC customer and then you came across, that's not an issue. The only way we wouldn't open you an account would be if you had, if you had fraud on your credit file if there was fraud. If you're bankrupt, it's not a problem. You still have an account.
That seems weird, because every time I've gone to a bank after my debts have gone into administration, I'm not bankrupt.
What banks have you gone to? So there's different banks. Okay, so
Covered pretty much all.
So there's two banks on the high street. There's two banks on the high street that will offer you an account. Okay, the cooperative and Vice Bank. There's a social inclusion. Okay, well, in terms of their policies.
Fraud and I'm not. There's nothing fraudulent about it. It's just non-payment of a debt to a cost. And so I can't get a bank account at all with any.
Okay. Right. The thing you need to then do is you need to find out what the social inclusion policy is of that bank. Okay. And you can go and you effectively demand to open your account. What you have to bear in mind at a local level is there will be certain management practices at local level to try and dissuade you from opening a bank because of the metrics by which they run their branch, and that is something that unfortunately will impact the customer, and it's something you've got to be aware of, because then if you have so many of a certain type of customer coming into your, for whatever reason it could negatively affect your metrics, then you might instigate a rule in your branch to say, don't encourage that, or we'll make it difficult for us to be able to ID you and verify you to open an account. I know it happens in the industry.
On that same notice, when you actually file credit card agreements, when exactly do they change the power of attorney?
Power of attorney in what sense?
Well, because whenever you fill out a credit card agreement, it never says that the bank has power of attorney to sell on the credit card agreement.
No, it doesn't, no.
So by that right, if they then sell on the credit card agreement using special power of attorney, that's credit card fraud.
Could potentially be, yeah.
No, it is.
No, I totally see your point.
So that's my great one. Like I've had a look at my mortgage. I've had a data access request, and then suddenly I find there's a special power of attorney saying they can do whatever they want with the details of it, and they can sell on my mortgage to whoever. So it could be someone in Bahrain for all I know.
Do you know that?
So it would be interesting to go through some of the contract. I mean, ultimately, you can obviously you can ask for your full credit details any time. You can demand that information. I'm not saying it's easy to get hold of, but you can demand it.
When you go in and you sign a basically contract saying that you're going to pay a certain amount of money, some people believe that bit of paper with your signature is a kind of asset to the bank, which they can then create funds based on the fact that they have someone promised to pay them money, which is essentially the same as money because it's promised to pay. So the idea is that somebody promised to pay money, which is promissory note. So if they give you got a £10,000 loan, there's a £10,000 promissory note that you have from the individual. So what I'm trying to say is giving the bank something of value because it's valuable to
Your
them,
signature, yeah.
and then they're giving some value to you because it's something you can use in the market. Then you have to pay back that plus interest. What I'm just saying is, from some people looking at it, it looks
Yeah.
kind of like you're both giving each other something, but the bank are getting a bit more or a great deal more. And is that
What I'm asking, and I think what you guys say is the application form being monetarised and then being sold on effectively. So I sign a form and you're saying, oh right, so is it effectively being turned into a bills of exchange?
Not at
under the bills
I
exchange.
can answer that. Not at a personal level, no it isn't. Okay, because that documentation is held at branch level. It's not sent off, it's not centralised. However, we know that we can look at our lending book and we can say that every single person, that all that lending we got out, we've all had to sign paperwork and documentation, so we know that we can effectively trade that as a commodity and we can sell it on.
So,
And we can bundle it. We can bundle lending, yeah, and we can create risk products, and we can sell them on, and then they can be sold on again. They can be sold on again, and then we can buy into a certain area. So we can effectively be buying back into debt we've sold on. It's been sold on 3 times over, and we can be exposed and buying into our own debt twice. We never know, and that's one of the major causes of the credit crunch.
you know, I've just done the process. You know, I borrowed $5,000 to get a car, which was fine. And the bank just puts a couple of digits on in my internet banking, and then I go to work and I sort of give my time and my labour, and I deposit real funds into the account. You could just hop onto your system and just go, plus 5,000.
that's money of a crowd.
Yeah.
That's money of a crowd, and you're being asked to be money of
But
a crowd.
you like sweat equity versus just balancing work.
If I were to approach the bank,
Yes.
promise me
By law, it has to be accepted because we can put it through the Bank of England. But you try and get the bus home now and pay with stamps. That's what I would say.
So if we came into the bank with promissory note, you would accept it for value. You would
Well,
accept
we've got to, haven't we?
You've got to.
But we don't. We wouldn't.
That goes back to
It's-
1882,
Yeah, I know.
yes?
I know.
Bills of Exchange Act.
So you were saying that you have to accept promissory notes.
Well, right by law, we do. Of course we do.
What
But we
constitutes a promissory note?
it is a note with your signature on, and it outlines your precise promissory intentions. That's effectively all it is, isn't it? That's effectively all it is.
Not just a promissory note.
Sorry.
Can someone sell a promissory note?
In theory, yeah. Of course you can. In theory,
Let's say I had a
it doesn't happen,
Let's
but
say I had a
in
promissory
theory
note
you
for
can.
£9.
The fact is because everything is marked in risk, it doesn't happen because people just wouldn't accept it, would you? You wouldn't accept it if I did to you. So effectively,
there's no
it's
credibility.
exactly credibility just as.
Credible to be.
That's why we move into the realm of contracts.
But the thing
That's all
with
it is.
promissory note is you've got to have 2 parties, one giving, one accepting, and plus a signature on it for it to be an accepted promissory note.
It has to be, it has to be observed.
So if the person accepts me and say, no, actually I'm not going to have that because I'm not going to be the third party to that, it's no longer a promissory note.
But one person could observe both parties as well.
Okay.
So, in a real life situation, imagine someone actually came into your branch with their promissory note that they've made, they've done it correctly, etc. They've gone to the counter, obviously the bank tellers, like, what the hell is this? Call the manager, you come along, you look at this thing, he's done a legitimate promissory note. What are you do about it?
I'm going to break the law, aren't I? And not accept it.
Because you're going to break the law.
Yeah.
Because
So you would get
otherwise
it
your
back.
job's on the line, basically.
So you get it
Yeah,
back.
I wouldn't accept it, yeah.
But can I take the matter further then?
Go on.
With your boss, I can say, well, you failed to accept this, which I'm well within my right, and if I take it at higher levels,
It would be interesting to see where...
We are now doing this on the website, Get Out Debt Free, because Salon has put up he's now doing this with backup paperwork.
Right.
So giving the paperwork, and he's saying, well, they've got to accept, and also accept it for value as well, if anyone's been involved.
The problem is you haven't got any case law with this kind of stuff. This is the problem. So
No case
you need,
law.
you need examples of this to go through.
Under the Bills Exchange Act also, that if I don't pay off my so-called liability, I borrowed money from you, I don't pay you back, but Terry pays you back, that means I wouldn't owe you anything. If Terry pays off my account.
On your behalf, yes.
Yeah, on my behalf.
Yeah, that's fine.
okay.
He also strikes a deal with you because you know that you're not going to get any money out of me. So you sell the debt to Terry. Do I still have any liability?
I'm selling. Do you know what? I'm just trying to think about this. So you would have.
Good business.
There's a lot hinges on this.
That's up to Terry.
Well,
The
no,
liability is up to Terry to enforce it on you.
Yeah, I think it's up to the Bills of Exchange Act,
Because
1882. Is he not taking on my liability?
He has. He has. And obviously, at an organisational level, that happens.
Yeah.
Okay, not personal level, obviously, but at an organisational level, that does happen. And yeah, a contract would be written up as such to say so. So we don't just rely on.
Because you will no longer pursue the debt.
precisely.
However,
Yeah.
Terry now thinks that he can come and pursue me. I'm sorry, you're an interloper. I have no contract with you.
So you can just send my thank you.
It's only effectively intimidation tactics that lawyers can use. Yeah.
I hope this is coming out.
In your own opinion, do you think that the monetary system is going to collapse?
Do I think it's going to collapse? I don't think it's going to collapse. I just think it's going to be maintained in a state of ruin for decades and decades to come. That's what I think.
do you think it might become
I hope it collapses, because that'd be a good thing. It needs to collapse.
Okay, quick question.
Go on.
When I sign my credit card agreement,
Yes.
does the bank sign it?
Your credit card agreement?
Yes.
No, there's no signature for a human being.
So would you say that it then is a unilateral contract? because
A contract, a written contract.
needs two signatures.
By law,
Because this is one of the questions that I ask. Because we say, people can't get onto the website, and we write them back and say, well, can you prove that show us that you lent us anything of value?
Yeah.
Say, show us the accounting, and show us the contract. And can you send us a copy of the contract signed by both parties? Because under contract law, which is the basis of how we commerce, unless there is a signature by both parties, it's a unilateral contract which does not stand in law.
If someone applies in branch, we don't actually sign any of that paperwork. In terms of the legality of it,
So
when you
there's
get
no
your
wet
paper,
ink.
when you get your paperwork back, I mean you've got computer signatures all over it,
Right.
from the head of credit risk, but you haven't actually got a signature.
A wet
Do you
signature.
file it?
Do you file it? What do you do with the physical paper? Do you
So
file
for
it?
credit cards, they get sent off and they're scanned centrally and they're held.
In a
centrally.
scan, as a scan.
Yeah, they're scanned. Yeah, scanned. So they're held on computer, and we can't. The paperwork we can't actually chuck away. You have to keep it for 56 years.
Knowing what you know, what are you still doing in the bank?
He's got a job.
It's got a job.
I'm a retail banker, okay, and I pride myself that my branch, we genuinely help our customers as best we can. Okay,
Within the constraints.
within the constraints we're set.
Yeah.
I mean, I don't,
We're not, we've got no quarrel.
I'm not a city banker. And the thing is, what I love and what kind of makes my day is when I get someone come in who says, turns it to me and says, "We made bankrupt. Lloyds have chucked me out. HBC have chucked me out. Friends told me I can come to you and I can get an account, I can get a card, or I can go and shop. Fantastic. And then if we find out they've got a family or something, we're able to provide them some form of protection for their family. It's like when they really need it, or you just at the end of the day you think, actually that customer's walked out, they're buzzing and we're buzzing, we just think that's really good. That's not happening in a lot of retail branches. I don't know. It's a different experience, but the bank manager's dead,
And it's discouraged, isn't it?
and we're no longer the fact. I mean, I stand up quite frequently in our board meetings, and I say, look, we're not bankers, we're retailers.
That's it, exactly.
We're not bankers. My grandfather was in banking, and I sometimes talk to him about my day job. He's just alien to him. It's just this alien world. He just does not understand what we do. You've got to think. I mean, ultimately, at senior level, you've got to consider all your stakeholders. You've got the regulators as stakeholders. You've got the politicians as stakeholders. You've got customers as stakeholders. You've got all these stakeholders. But who is the real stakeholder? It's the shareholders. So at senior level, that's all you care about, because they're the ones that, they're the puppet masters. And that's what, it's the same in any large organisation.
Now, if I was a customer of yours and I said to you, look, my name is John of the family Whitterick, I'm not Mr. because that's a title, and a title means, on banking law, means ownership. Okay?
Yeah.
So, would you write me a letter, would you agree to write me a letter with just my name, just Jonathan of the family, or Jonathan Whitterick, but with no Mr. and not in uppercase? Would you agree to do that?
Our systems allow us to do that when we send out statements and communications. Yes.
Yeah.
Our systems allow us. In terms of how you would look when I open up your customer records, you have to have a title.
Because a friend of mine, His name is actually Sun. I call him Sunflower because I don't want to give his name away. Don't want to give his second name away. But it's a similar sort of name, and that is now his name. And now they have to call him or her, whatever, Mr. Sunflower.
Right. Okay.
Now he's saying I'm not Mr. I haven't got a title, and every time they write him a letter, it's got Mr. on it. It's as if there's something about the title or the uppercase name which is significant.
We communicate. We have a lot of customer requests to communicate with them, removing titles, adding titles, changing names around, and we can do. Yeah, we do that. Yeah.
Do you feel that there is any significance in the title?
There is, but the fact that you have to have a title on your record as such, and when contracts are drawn up, obviously the name that's on your customer comes up, as opposed to general correspondence where we can change it to.
Do you know what my comprehension or understanding of that is? And there's probably a few people around the table. Is that is referring to a corporate fiction, and not the blood living being.
Yeah,
But
you
that
are
is
you
a
are an
corporate
entity.
Corporate entity,
Yeah. So you accept that.
yeah.
Thank you.
So you
But
know
whether-
about that. Do you know about that then?
Whether that's
shake your hand, yeah.
whether that's
Shake your hand.
I have a title that's not in the drop-down box, so I feel that I'm a master, and you don't offer that option. Can I write into my bank and request a title that's not in the drop-down box?
Do you know, I'm just trying to think now, right, on our drop down, whether there's other and whether we can specify
No, there is
something.
not.
And I
No,
don't,
there
I
is
don't.
not. No, because that's
It has master.
where
If
is
you're
it?
master, you're not the corporate fiction.
What's that, sorry?
My Barclaycard, when I get a statement through, it says Master's House Studios.
With a capital
Well,
M.
it's still in capitals, yeah.
This has been fascinating. Really enjoy it.
Well, yeah, hopefully it's been an insight.
Yeah, we can say thank you very much.
Thank you.
I mean, it's,
Do you have any questions?
Yeah, did you quit? You know, guys, it's a fascinating group, and it's
Do you know
great
where
that
to
clearly
find
you kind of get together and kind of debate and stuff.
Debt Free TV, in association with GetOutOfDebtFree.org.